I believe that, yeah, Bitcoin is going to get to $1 million. There's no question in my mind. The question is, how much does that $1 million buy you?
Yeah.
And thinking in terms of US dollars again, like, what is that worth? I've been saying for a while now that I do expect us to have a period of inflation that's going to be much higher than they'll either admit or that we saw this last cycle. It could be 12, 15, 20%. Or you could have this cycle, which Luke kind of believes, where we have massive inflation. Like, you're talking like, 50, 100% inflation, another 10, 20, 30 trillion dollars. What do you think is going to happen to the dollar and the treasury? Right?
Yeah.
So that will wake people up, and it'll come back to the money supply being broken and it being painful for them, and saying, I need someplace else to store my value. Now, this is a very US-centric answer.
Lavish begins by addressing a fundamental question. How does Bitcoin compare to other investable asset classes like bonds, stocks, real estate, and gold? He lays out the staggering size of these markets: bonds at $130 trillion, stocks at $120 trillion, and real estate ranging between $300 and $500 trillion. In contrast, Bitcoin, with a market cap of just over $1 trillion, is still a minuscule player in the grand scheme of things. One of the critical issues Lavish raises is the impact of inflation on the value of Bitcoin. He acknowledges the common prediction that Bitcoin could reach a value of $1 million, but he emphasizes the importance of understanding what that $1 million will actually buy in the future. Drawing parallels to hyperinflation scenarios in countries like Zimbabwe, Lavish warns that while Bitcoin's nominal value may increase, the real purchasing power could be affected by inflation. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
How much percentage of Bitcoin does it become of the overall investable asset class? So, you've got bonds, 130 trillion, you've got stocks, 120 trillion, you've got real estate, 300 to 500 trillion, depending on, what you believe, which Statista or whatever. There are a lot of different measures there, whether they actually have mortgages included in that, or if they've been pulled out. It's really confusing, but let's just say it's $300 trillion. You've got art and collectibles, you've got gold, and then you've got this little speck. Bitcoin. Does that speck grow and eat? Does it go Pac-Man and eat some of those other asset classes? And which ones does it eat? They eat the commercial real estate, residential real estate. Where does it start dipping into for people's portfolios to say, I'm going to reallocate some of this into that? So that's one piece. Right. And then the second piece is, how much inflation is there? Are we talking about nominal dollars today? Are we talking about, are we taking that future value of money and just speaking in terms of that? Because I believe that, yeah, Bitcoin is going to get to $1 million. There's no question in my mind. The question is, how much does that $1 million buy you?
Yeah.
And thinking in terms of US dollars again, like, what is that worth? Is it worth a house in Dallas? Is it worth a car?
Yeah.
Like, where does it? Is it worth a beer? Like, literally, like, that's the we've all seen the Zimbabwe dollar, where they was it $100 billion bill or something like that? It's ridiculous. So, will that happen? I can't say it won't. Eventually it will, unless we get off this path. And that goes back to, we have a major structural debt problem in the world, and the US is much worse than people realize, because of our unfunded liabilities. And we've talked about this before. And so you know that's it's this looming problem. When does that, what happens that we have to face that problem? And again, I'm an optimist.
Yeah.
We talk a lot, and we're talking doom and gloom here, but I'm an optimist, and thank God we have Bitcoin. I mean, truly, I wouldn't know where to turn. Massive inflation, just massive nominal GDP inflated, and to pay down debt, to pay down old debt that, this is emerging market kind of stuff where you don't have. I've been saying for a while now that I do expect us to have a period of inflation that's going to be much higher than they'll either admit or that we saw this last cycle. It could be 12, 15, 20%. Or you could have this cycle, which Luke kind of believes, where we have massive inflation. Like you're talking 50, 100% inflation for a period of time, and it just pays it all down, right? So will they let that happen? Well, I don't think they want to, but it could be unavoidable because of how we're set up with our spending, and we're fighting these wars, and we're, so if you get in a situation that the United States just has no choice but to print another 10, 20, 30 trillion dollars, what do you think is going to happen to the dollar and the treasury, right?
Yeah.
So that will wake people up, and it'll come back to the money supply being broken and it being painful for them, and saying, I need someplace else to store my value. Now, this is a very US-centric answer. There are plenty of countries around the world and people around the world that they're experiencing something entirely different than the United States is, where a place like Egypt and Lebanon and Venezuela and Argentina, where they have had such gargantuan bouts of inflation that you literally you walk into a restaurant and they're changing the prices between the time that you sat down and the time you're leaving, because the inflation is happening daily, and so they're not just looking for, oh, I need to protect my money. They're looking for, I need to have someplace where I can put my money where it doesn't just evaporate, get eviscerated. And if there becomes great instability in my country, how can I take what I own with me? Well, we've talked to some of our friends here in the Bitcoin community who have fled those areas. And Venezuela, for instance, and gone to Canada, and with nothing but their clothes on their back and the seed phrases for their wallet.
Yeah. And
they were able to transfer all of their wealth from one country to another without ever moving anything.
Yeah.
Because Bitcoin is everywhere.
Yep.
So there's kind of two answers, I think that this continues to grow organically around the world, unfortunately, because of all the inflation problems around the world. And then you've got this other answer with the U.S., which is a larger kind of investment style, and I'm waking up to the fact that the money is broken event.
Yeah.
So that's kind of how I see it anyway.
As Bitcoin continues to grow, Lavish notes that its volatility will likely decrease, especially as more institutional investors enter the market. Institutions, which manage large sums of money, are typically more risk-averse and will seek to stabilize their investments. As a result, their involvement in Bitcoin could lead to less dramatic price swings, making it a more attractive option for a broader range of investors. Lavish also touches on the psychology of investing in Bitcoin, particularly the shift from viewing it as a risky gamble to seeing it as a viable store of value. He acknowledges that for many people, Bitcoin still carries a stigma of being a speculative asset similar to meme stocks or lottery tickets. However, as the understanding of Bitcoin's underlying value proposition grows, this perception is gradually changing.
Just remember, though, that Bitcoin is such a small asset. It's still only $1 trillion, right? So when you look at gold is up, depending on whether you include jewelry in there or not, which people have jewelry that they consider investments they have in their safe,
Yeah.
But if you look at that, it's 15 trillion. So Bitcoin's tiny compared to gold still. And if you look at all the assets around the world, somewhere north of $800 trillion in investable assets. I mean, Bitcoin's just, it's a fraction of a percentage of that.
Mm.
So that's where there's two kind of mentalities that we're talking about. When you look at Bitcoin and think, okay, well, it's just another risk asset, like you're talking about. It's another GameStop. It's another, meme coin, whatever. It's just something else that I can gamble my money on because I'm trying to catch up. And that's one mentality. And we see it all the time. We see the gambler's mentality everywhere. I don't blame people. They feel like it's their last choice. Why do you think they go buy gas, they go in to get, a Diet Coke, and they go up the counter and like, oh, well, give me a couple lottery tickets.
Yeah.
Why do you think they do that? Because they think they're going to win the lottery? Well, because just the off chance that I win and then I can stop doing this grind, and I can get out. And it's this little hope, and so that's one way to look at it. And it's been there. That's what Bitcoin has been for a long time to most people who are not true Bitcoiners.
Yeah.
But then you've got the other side, which is, oh my God, this money supply is inflating so rapidly. I need to put my money somewhere that I can trust it's not going to be inflated away, deflated.
Yeah.
Right. So, and that's the other camp. And I think that camp is growing. And as that camp grows and that understanding, those people, that it's kind of like a movement that people understand it. And again, it's so difficult for us because we're North American centric, and for us to think of it as a lifeboat, like truly a lifeboat. People are like, yeah, and so are guns and storehouses full of food and all that. You crazy Bitcoiners, you guys are like, oh, end of the world, go find a ranch somewhere. But self-sovereignty, but that's real around the world. So that when the US prints $20-30 trillion, what do you think all the other countries are going to do?
Yeah.
So that's kind of the way I think that you're going to have both. But as Bitcoin has more money come into it as that true store of value, that volatility does drop, especially as institutions come in, because they're like, well, suddenly this long bond that I own is now down 50% again because, investors are demanding higher premium for it, risk premium, because they know that inflation could rage out of control here. Yep. And so I've lost money there again. Where can I put my money? Gold, stocks, Bitcoin, like where can I put my money that I can, I can trust that it's not going to again be destroyed because of inflation. That's kind of that shift is happening. And then, I hope we don't have a period of financial pain that causes it to happen rapidly, but that it's hard to say that it won't.
Lavish points out that as the US continues to print more money, other countries will be forced to follow suit, leading to a devaluation of currencies worldwide. This scenario could drive even more people towards Bitcoin as a safe haven asset. He suggests that the current financial system is unsustainable and that Bitcoin offers a viable alternative that can help individuals preserve their wealth in the face of growing economic uncertainty. Lavish is cautiously optimistic about the future, noting that while he hopes we don't experience a period of severe financial pain, it's difficult to see how we can avoid it given the current trajectory. However, he believes that Bitcoin's growth will continue, driven by both organic adoption in regions facing economic hardship and increasing interest from institutional investors. Please like and subscribe my channel.